Has Bitcoin already bottomed? That's a question a lot of people are beginning to ask. After the huge correction we have seen over the last several months, Bitcoin has started flashing signals that have previously marked the end of bear markets. But at the same time, history is giving us reasons to believe that the worst might not be over yet. So in today's video, I want to compare the strongest arguments for and against Bitcoin already putting in its bear market low. Some of these indicators point to the bottom already being in, while the others suggest we could still see one more move down before the final low is in. And by the end of this video, I'll tell you where I personally stand. Let's start with one of the strongest bullish arguments, the 200-week moving average. If you have been watching this channel for a while, you'll know that this isn't just a random moving average. It's one of those indicators that has consistently played a key part of every bear market. Back in 2015, Bitcoin found its bottom almost perfectly around this level. The same thing happened again in 2018. Then in 2022, price briefly traded below the 200-week moving average and eventually putting in the bear market low. Fast forward to 2026 and once again Bitcoin has come down, tested this level, and so far buyers have managed to defend it. Historically, whenever Bitcoin has successfully held this moving average, we have either already seen the bottom or at least been very close to it. So naturally the question becomes, are we watching history repeat itself once again, or is this time going to be a bit different? Now, if that was the only chart we were to look at, I'll probably feel pretty bullish. But Bitcoin doesn't trade in isolation anymore. Whether people like it or not, the stock market has become incredibly important for crypto. If stocks experience another major correction, Bitcoin is almost certainly gonna feel that pressure as well. And when you compare previous Bitcoin cycles with the stock market, something interesting starts to appear. Historically, when Bitcoin tops around Q4 before a bear market begins, the stock market has often seen an initial correction during the first part of that bear market year. That's exactly what we have already seen this year, and it also lines up with Bitcoin's typical decline into February during previous bear markets. But that's not the interesting part. The interesting part is what happened afterwards. In those same years, the stock market often experienced a second correction later in the summer that stretched into Q4. Coincidentally, or maybe not, that's also around the same time Bitcoin has historically gone on to form its bear market bottom. So while the S&P 500 has looked relatively strong over the past several months, there is still a possibility that another correction is waiting later this year. And if that happens, Bitcoin is unlikely to escape it. So while the 200-week moving average is certainly encouraging, the stock market picture tells us to remain cautious. However, even if stocks pull back, Bitcoin has something going for it that it didn't necessarily have in previous bear markets. Strong support. Just recently, Bitcoin found support once again at $60,000. And this isn't just a random price level. Several major levels line up here. First, we have the 200-week moving average that we talked about earlier. Second, we have the previous all-time high from the 2021 bull market. And third, we have the long consolidation range throughout 2024. Whenever multiple support levels overlap like this, they create an area that's much harder for sellers to break through. Now that doesn't automatically mean that the bear market is over. We could easily spend several more months moving sideways before Bitcoin begins to trend up again. But what it does mean is that there is a strong case that Bitcoin is not gonna revisit 30 or 40,000 like a lot of people are expecting. Although those people aren't making random predictions. They actually have history on their side. If we zoom out and compare previous Bitcoin bear markets, one thing immediately stands out. Every major bear market has seen an enormous drawdown from the cycle top. Back in 2014, Bitcoin lost roughly 87%. In 2018, it was another 84%. And in 2022, the decline was slightly smaller, but still incredibly significant. So naturally, people expect something similar to happen this time. If Bitcoin were to experience a 80% decline from the October 2025 top, we'll be looking at a price somewhere around 25k. Personally, I think that's unlikely. One thing Bitcoin has shown over the years is diminishing volatility. Every bear market has become a little bit less extreme than the previous one. So instead of assuming a 80% crash, let's say Bitcoin drops around 70%. That would put Bitcoin around 38k. Now suddenly those bear markets targets doesn't sound as extreme. But I actually think the timing argument is much stronger than the price argument. Historically, Bitcoin has bottomed roughly 1 year after making its bull market high, give or take a month. So since Bitcoin topped in October 2025, that would suggest a potential bear market low sometime around October 2026. So even if Bitcoin doesn't crash 70 or 80% from the bull market top, history suggests we could still have several more months before the bear market is over. Now let's look at another chart that's incredibly hard to ignore, the weekly RSI. Bitcoin has already been below 30 on the weekly time frame, putting it firmly into oversold territory. This has happened during every previous bear market. Not necessarily at the exact bottom, but always very close to it. That's already a strong bullish argument on its own. But what makes this cycle even more interesting is what happened before this bear market began. Unlike previous bull markets, the 2025 top never became euphoric. If we look at the weekly RSI during previous bull markets, it pushed above 90. That's extreme. For perspective, anything above 70 is already considered overbought. But in 2025, Bitcoin only reached about 64. It didn't even become overbought when it topped out. And honestly, I think this is probably the strongest argument against expecting another brutal bear market. If we never experienced that euphoric top like in every other cycle, why should we expect the same brutal bear market that followed it? Markets tend to move in cycles of emotion. Extreme greed is usually followed by extreme fear. But if greed never became extreme for a long period, maybe the extreme fear won't either. Personally, I think this is a very good argument. That being said, there is still one example that reminds us not to become overconfident. Back in 2019, Bitcoin also failed to reach the extreme RSI levels we have seen in earlier cycles. Yet despite that, price still went on to fall around 70% from the local top. Now of course that period included the COVID crash, which makes it a unique situation, but it still shows us a less euphoric top can still be followed by an extreme decline. Now let's move away from this technical analysis and look at some on-chain data. One metric that really caught my attention is Bitcoin realized loss. This measures investors actually locking in losses by moving coins that were previously at higher prices. What's fascinating is how similar the current structure looks to 2022. Back then we saw one large capitulation event followed by another. After that came a period of sideways price action, a short relief rally, and finally one last capitulation before the market eventually bottomed. This cycle has looked remarkably similar. We had a major capitulation around November, then an even larger one around the February lows that convinced almost everyone the bear market was here. Since then we have traded sideways and even seen a relief rally. Does that guarantee the bottom is in? No, but it does suggest we are further along this bear market than what most people are expecting. Finally, let's look at Bitcoin's realized price. The realized price represents the average purchase price of every Bitcoin held. Whenever Bitcoin trades below this level, it means that the average holder is underwater. Historically, every major bear market has briefly traded below the realized price before eventually putting in its final bottom. Right now, that level sits around 53k. We are getting close, but not quite there yet. Personally, I think it would make a lot of sense to at least trade below it briefly before this bear market is complete. So where does all of this leave us? To be honest, I think there is good arguments for both sides. The 200-week moving average, the weekly RSI, the lack of a euphoric top, and the realized loss data all points towards the bear market low already being in, or at least very close. On the other hand, historical timing, previous drawdowns, the realized price, and the possibility of the stock market seeing another correction all suggest that there could still be one move lower before we see the bottom of this bear market. Personally, I'm already starting to buy again, not because I know the bottom is in, nobody knows that, but because I believe the current prices are gonna look very attractive in a few years. I still think a bottom around October this year makes the most sense based on previous cycles. Whether Bitcoin gets there by moving sideways or dropping another 10 or 20%, nobody knows that. That's exactly why I'm starting to dollar cost average again instead of timing the bottom perfectly. If the market continues to go lower, I'll continue to buy. And if the bottom is already behind us, then at least I didn't spend months waiting for the perfect entry that never came. But of course, this is just my opinion, not financial advice. So if you enjoyed this video, remember to like and subscribe, comment down below what I can do better, and if you think the bottom is already in or it's gonna be later. Thank you guys for watching, and I'll see you in the next one. Peace.